Today is 22nd day of April, Thursday, and it's just about 5 minutes before we kick it off. Okay, the World's Hacker Podcast comes on every day. You can join us every day by 7 o'clock. By 7 o'clock every day, we are doing the World's Hacker Podcast. This podcast is where we tell you about how you should invest. We give you tips on investing so you don't lose your capital. That's what we do. So, and then we look for ways you can double it at the tail end.
Jessica, we are live on Telegram too, on the World Hackers Telegram page. And then we have about 2,000 people on the page, most of them actively listening, and then we'll just go right ahead. So, Jessica, let's just get right into it because it's already 7 p.m. GMT. So, Jessica, firstly, I would like you to introduce yourself and maybe tell us a little bit of how you started your investment journey. I'll say my impact because I first got into the investment journey because my dad was an accountant, and then from him I learned a lot about stocks and all that. So how did you start your investment journey?
The basic rules of the stock market: you never have anything till you sell. Never risk what you can't afford to lose. Something's only worth as much as somebody else is willing to pay for it. I grew up hearing these things, but I didn't realize the true value, obviously, of what he was teaching me when I was a child. I was actually always terrified of investing because I remember when the tech bubble burst. I wasn't invested at the time. I was young, but I remember hearing about it. And then I kind of started my career and was a newspaper reporter when the foreclosure crisis happened. And obviously that was just devastating for the United States and the whole world. But, fast forward a few years and I had, a high quality problem. I had more money sitting in the bank than I thought was necessary. So I figured, you know what? Maybe I should start investing for my future. And as it turns out, I love it. I didn't expect to love it. If you had told me, 20 years ago, one day you're going to work in the stock market, I would have told you that you're insane.
All right, that's nice to know. Okay, so now let's just dive right straight to your investment style. You talked about when you had a lot of money and then you were like, okay, you should invest some of it. So how do you allocate the percentage that you're going to leave in cash and the stocks you're going to buy? How do you do your stock allocation? And are you a value or growth investor? How do you see these things?
I want to go with my brother on this one. I think we put too much focus on these terms: value investor, tech investor, growth investor. I like to buy good companies that I think have strong fundamentals and growth ahead. So I don't worry, I think Disney is a great company. It's not maybe a sexy company, but I think it's a company that's worth owning, and I have owned it in the past. Is it a value company? Is it overpriced? Is it tech? I don't care. It's a great company with the best IP in the world, in entertainment. For me personally, step one is always making sure you have an emergency fund. And as long as you have that emergency fund covered, I think it helps you be less emotionally attached to the ups and downs in the stock market. I personally think of myself as a long-term investor. I do swing trade sometimes. Some pullbacks are just tough to resist. I mostly use options for trading, but not exclusively. For my core portfolio, I prefer to keep it more concentrated. It's hard for me to build conviction.
How many stocks do you have in your portfolio?
Sure. So I have Amazon is a large position for me. So is SE. Everybody loves that company. I do too. I also let me take a look. Actually, I should. Amazon and SE are my largest positions. I believe Pinterest is still largest position right now. I've got a relatively large position in FD and DraftKings. The DraftKings is due to the stock moving. I didn't put an outsized amount into it. It just, I didn't expect that run. It just went crazy.
Yeah.
I also have a large position in PDOC. I've got positions in Thieves and a basket for iBuying. So I have Zillow, Redfin, and Open. Open's been a tough position lately, but this is a very long-term play for me. Most of the stocks that I own, my entire core portfolio, is always going to be things that I see very long-term tailwinds in, such as e-commerce or iBuying.
Okay. Oh, okay, that's great. I know you just said that you concentrate on the business and not the like value or growth. But do you invest in emerging economies? We're always interested to know whether you are any guest we have is investing in economies like our own in Africa. We have South Africa, Nigeria. We have a lot of we have some stocks that are listed in the New York Stock Exchange and all that. Do you look into emerging economies?
Sure, I do. I'll be honest, China is the emerging economy. China is, I don't even know if it's fair to call it emerging economy anymore. China has been the country that I've concentrated on most, and for kind of obvious reasons. The growth has been just outrageous. There's a lot of innovation, but I do like geographic diversity. That is one of the reasons for my position in SE. I'm truly sorry I missed Mercado Libre, and I did look at it, but you can't own every great company. I do like geographic diversity. I prefer to stick with sectors I know, so I personally rather diversify by geography, not sector.
Okay. Then I was going through a lot of your. I'm personally a big fan of yours on Twitter. So I remember the time I was doing my thesis on interesting gaming holdings. I ran into some of your posts, and then that's how I gathered information that I use for that. So what do you think is the future of the gaming industry? From what you're seeing so far.
I actually don't typically invest in anything gaming, and the reason for that is that I'm not a big gamer, and a lot of people are. I don't think I have an edge in gaming. What I like about enthusiasts is that it's also involved in things I can understand. I do like social media. I do think I have an edge there. They produce a lot of content, and content as somebody who is, a writer and I started in newspapers and then switched into marketing. I cannot stand content. So that's what I really like. And, they're producing content in a good space.
Okay, that's nice. So, what of the? Let me just go to this before we talk about the downturn that's been happening in the market. What are some teams that you look at? Like, what do you think is the future of investing currently with the whole pandemic and everything that has happened so far?
Oh, geez. If I could give you the answer to that, I mean, I'm not sure anybody knows. Right now, I'm optimistic. I'm an optimist by nature, and I am optimistic, and I will remain optimistic. I think it's the best way to live and the best way to invest. I hope the economy continues to open in the U.S. and around the world. I hope everybody stays safe and healthy.
Okay, let's dive right straight into some of the way you invest in your portfolio. So, when you're buying stocks, do you really buy all your stocks at once, or do you buy gradually? How do you go about investing?
I rarely buy all at once. I'm sure I have, although frankly, probably regretted it every time. The rule is when you buy a stock all at once, it's gonna go down. It's gonna go down immediately, and when you buy gradually, it's gonna go straight to the moon. So typically I try and go slowly. I've been investing, in 2020, I invested, from no position up to full position a lot faster than I had in the past. But that's because the market was moving really, really quickly.
Yeah.
Typically, I try and grab my starting position will typically be 25 to 30%, maybe 40 if I'm really bullish. But I try and break it up in at least four chunks, maybe more.
Okay. So from what you said, you do actually believe portfolio sizing, and then how fast does a particular stock have to get before you say, okay, I'm cutting down some of it?
I try not to. My philosophy is to buy good companies and then let them run, because you really don't know what the future is going to bring. If you were lucky enough to buy Apple or Amazon 10 or 15 years ago, there's no way you could have known where they went. Typically, I do a lot of research. When I build my conviction, it takes a lot to change that conviction. If there is evidence that either my thesis is broken or I think there's a better investment opportunity, then I will look at exiting. I did swap in my retirement portfolio Alteryx for Redfin, and I had a good reason for that. Alteryx, hadn't performed well. By the time I sold it, it was at about the price I bought it at. I don't know if you know Alteryx well, but it had a really tough reaction to a bad earnings report.
Yeah.
But I sold it because I decided that for iBuying, instead of betting on Zillow, I wanted to have a basket instead. I think it's a great opportunity, but it's so early in the game, I think it's too soon to bet on just one stock.
Okay. It sounds
within that opportunity.
Okay. It sounds like you're a very big fan of iBuying, the iBuying program. Okay. I just wanted to get your thoughts on the iBuying program on itself, and what do you think about ESPI? I know you know about ESPI.
I haven't made it. EXPI and Fathom, I've been stalking. I haven't honestly made up my mind about them. Like I said, in 2020, I was buying very, very quickly because that's the market we had. But now I'm kind of back to where I started, which is, take your time, build conviction slowly. I've got a core portfolio that I feel pretty comfortable with. And again, I have been stalking EXPI and Fathom for quite some time, and I'm going to continue doing that because, again, I just haven't made up my mind yet. I don't know. I think they might be. I think they're interesting.
Okay, I want to get your thoughts on this. Warren Buffett once said that if you're like an individual investor, that you are not supposed to have more than 6 stocks in your portfolio, or that your 7th idea of a stock may be your bad idea. What do you think about that?
I think it depends on the investor, your style, your needs, and also your risk tolerance. I am sympathetic. I am very sympathetic to the idea of a concentrated portfolio, but the danger is what if you're wrong? What if you own 5 stocks and you're wrong about one of them? That's a significant proportion of your portfolio. Now, what if you're really unlucky and you were wrong about 2 things or 3? So for me personally, my sweet spot is about 12 to 15 core positions, and that's what I'm comfortable with. I know investors who think 10 is a lot, and I know investors who think less than 30 is insane. I think there's no right answer here.
Okay, you're saying it clearly depends on your mood. Oh, now I want to ask a question. Do you normally check your portfolio every day? I'm diving right and down to the downturn that has been happening in the market. Do you check your portfolio every day, or do you check intermittently? And how often do you fund your portfolio?
Well, given my job, I work with Beth Kindig and Knox Ridley at IO Fund. It's impossible for me not to be aware of what's going on with the stock market.
Yeah.
In fact, if I wasn't aware of what's going on with the stock market, I wouldn't be very good at my job or helpful for our subscribers. So, unfortunately, a few years ago, I would have said, well, when there's a correction, I just tune out. I stop checking I don't open my brokerage app. And if I feel the need to check what's happening, I will do it, preferably once a week, but but at most once a day on Seeking Alpha, because you see the numbers, not the losses, and it's a little easier psychologically. For me personally, I do check pretty frequently during corrections. I am looking for potentially good opportunities, and also I've been trying to systematically build up my ability to tolerate pullbacks. And frankly, it's basically just cognitive behavioral therapy for the stock market.
Yeah.
And I think it's been really useful for me.
Okay. Then I just want to know quickly, what do you think about averaging down? We have a lot of people that got started investing newly. As I explained earlier, the World Hackers podcast, we are helping people that are investing from Africa. So a lot of us are not like investing a lot. Now we are helping people that are investing to know about these markets and know some strategies. A lot of people just started investing and they got caught up in the downturn. So what do you tell them about averaging down? What do you really tell them to do?
I would tell you the same. I would tell you and anyone else the same thing my dad tells me every time there's a correction. The first piece of advice is life is long. There's no need to hurry. Especially if you consider yourself to be a long-term investor, not a trader.
Yeah.
There is never a reason to hurry. Life is long. You've got time. What the market wants to do is it wants to give you FOMO and suck you in when prices are rising, and then force you to panic sell when the market crashes. The way to avoid that game is to buy good companies and hold them for a really long time. If you want to add, go ahead and add, but don't add because you're afraid, and don't sell because you're afraid.
Okay. Then
advice I would give you is, if one, I do not think we've got the big one coming right now, but you never know. The big, March 2020 happened. There will be another bear market. There will be another vicious correction eventually. There always is. Don't sell. If you don't sell everything. If you sell everything now, you will never get back in. And the other thing is, when the market turns, the best companies come back so quickly it'll make your head spin. And psychologically, it's really difficult to average up.
Okay, that's great. I kind of touched on this, but let me just circle back to it. So in your personal individual portfolio, what percentage of cash do you think is nice? A lot of people will talk about having a lot of dry powder so that whenever there's a correction that you can actually make a lot of investments with this. So do you have any yardstick that you use to know the amount of dry powder that you are keeping for the moment?
I don't typically, I typically like to keep a little bit of dry powder, but for me personally at this point, it's not about a hard percentage or a dollar amount. I like to have, I guess to give you a guideline, I like to have at least enough to add one full position whatever I consider a full position to be at that time. Because what I consider to be a full position rises as the value of my stock portfolio rises. Although I try, I try and ignore the major swings and but I will raise the value of what I consider a full position to be. So I try and keep approximately that much, especially if we've had a huge run and everything is looking, and the market is looking like maybe a little too enthusiastic.
Okay. That something really happened in Africa, Nigeria, where we invest. Now, as soon as there was a downturn, a lot happened. A lot of people sold all their stocks and rushed into crypto. I really want to know your thoughts on cryptocurrencies. I don't know. Are you actively buying cryptocurrencies? Do you have any in your portfolio?
I don't have any exposure to cryptocurrency. I wish I did, but it's not really my game. I think at this point I know what I'm good at, and I don't think I might, I'm not going to say never. If there's a major correction in Bitcoin, maybe I'll buy a little. But in general, I prefer to stick to what I know and am good at. I think it's easy. There's always going to be some other stock or asset class that is running. And this gets back to what I talked about with FOMO. Never buy because you're afraid you're going to miss out. That is the easiest way to blow up your account. Starting to play with things you don't understand.
Okay, that brings into question the question of opportunity cost. So, do you really believe in opportunity cost? And if you believe in opportunity cost, how do you really handle it? Because you say you swing sometimes. Because now we are looking at when you are keeping these stocks, you don't want to make some mistakes. But aren't you really missing out on the good things that are out there?
I suppose, but again, I think it depends on your risk tolerance, your style, what your portfolio needs. Maybe you have a young family and you want to take less risks. Or, maybe you're a 23-year-old single woman and you're still trying to grow your wealth. I think this is another place where it's just, there is no right answer. For me personally, I frankly have never worried about opportunity cost. I did in March 2020 flip Facebook into Pinterest, but frankly, and that was an epic buy.
Yeah.
But frankly, that was not because of opportunity cost. That was because I was done with Facebook, and I genuinely believed Pinterest would be a great opportunity. As it turns out, I was right, but I didn't say to myself, you know what, Facebook isn't growing fast enough. What's the point of this? I'm going to put it into something growing faster. Frankly, I don't think anybody knew in March 2020 what Pinterest was going to do. I liked the fundamentals. Every woman I know was obsessed with it, and the market hated it. Yeah. I didn't understand. I thought that would change eventually, and I was right very, very quickly. But no, I don't worry about opportunity cost. I rode JD over a period of years, by the way, from about 35 to, I think it bottomed under 20 before it finally took off. And that took years. Should I have? Maybe not. But the thing is, you never know when a stock's going to take off. March 2020, believe it or not, was easy. Any tech stock you bought went up. Investing is not usually that easy.
Yeah. Okay. All right. A lot of people got carried away by that, especially I'm talking from our side. Now, a lot of people got carried away that they knew that no matter what you buy, even if you don't do a due diligence, you don't really follow its thesis, anything you buy, it just goes that way. So I just want to have a minute to know what's your process of picking stocks. Like, how do you do your diligence? How do you know that this stock is going to go up?
I guess when I really like, I legitimately like Beth Kindig's approach to stock picking, in that she identifies promising trends and then chooses the stocks she thinks are going to benefit most from those trends. It's it's a very what's the word I'm looking for? It's a very disciplined way to approach growth investing, and I think my approach is similar in that, again, I like to identify long-term opportunities that I think have long-term tailwinds, and then pick the best companies that fit those trends. Now sometimes it's like Pinterest and Etsy. I was actually looking at the same time as Pinterest. Sometimes you just find good stocks. Pinterest and Etsy were different. I just thought they were great companies that were underappreciated by the stock market. But typically, I have a lot of exposure to e-commerce. I think that has long-term tailwinds.
Yeah.
I've got an iBuying basket because I think the potential, I could be wrong, but the potential opportunity in real estate disruption is huge. I love TDOC for the same reason.
Yeah.
Healthcare is the largest sector of the U.S. economy that has never been substantially disrupted.
Yeah.
And the potential opportunity is huge.
Okay. Let me just go back to Pinterest. I remember you made a tweet about Pin, and you said something like that the shorts are being insane for the way it's going and all that. Did it surprise you the level of downturn the market experienced or something? What really happened? Because you really seem surprised on that tweet.
I'm never surprised. I'm hesitant to say the stock market surprises me. Reverse that. I'm hesitant to say nothing surprises me, because then the stock market is going to surprise me. I don't want to jinx myself. It's the stock market. Anything can happen at any time. Most of the time, what you're dealing with is probabilities. Is it likely that the big one is going to start tomorrow and we're going to have a 2-year bear market? No. Is it possible? Absolutely. Is it possible the stock market trades sideways for a decade? Yes. Is it likely? No. And I think that's my perspective on that. We're dealing with likelihoods. Sometimes the small percentage event is going to happen. And March 2020 is an excellent example of that.
Yeah.
Great. Thank you for coming. I don't want to take more of your time. You've done a lot of great work answering us. As I said earlier, we are the World Hackers. The World Hackers is a financial company that helps people to, especially people from Africa, Nigeria, West Africa, and Africa in general, to learn how to invest in the emerging economies and developed economies. And we're trying as much as to make people not lose money so that they can invest effectively and then get more knowledge and then get some rewards from it too. So I'm hoping I can have you maybe on a weekend chat on video and all that sometime. I don't know if you can come to us, and I'm very thankful for you speaking to us today.
Absolutely. Well, it was fun, and I wish everybody the absolute best of luck in investing. I don't know how many growth investors but I think my final thought is don't overlook companies like Walmart, Target, Dollar.
Okay. All right. Thank you very much. We were talking to Jessica. We talked about how to downturn from the markets and all that. So there was PMGMT. We talked about ideas of how to invest in the market, how to profit. We talk about cryptocurrencies. We're hoping to have you all tomorrow for another edition. Thanks, guys, for coming.